Good afternoon. Welcome to Options Tender. It is Friday. Welcome, everybody. Happy Friday. Happy New Year. I just want to go through QQQ, SPY, and VIX. We're going to go on the daily time frame and also the 65. And if we have enough time, this again, a little bit shorter video. If we have enough time, we'll go through TNX and the dollar, the DXY, and we'll go through those because they're kind of helping move the market here. And we pointed this out on Twitter and YouTube posts, a couple posts there. But that's it. And then on the weekend, we'll go over the higher time frames because there's been some interesting weekly sell signals, and so we got to check that out, and we'll go from there. So thanks for joining us, and if you're new here, go down to that bottom right hand corner, hit that Option Center logo, and subscribe. And thank you everybody for the likes. It has been a tremendous last month for subscribers and likes and such. So we're growing the channel, and so now I really want to get this information to tons of people and help out traders. So let's jump into it. We have QQQ on the daily time frame. You notice our consolidation area here. We broke down. We had a fake break, all-time highs, broke back into that consolidation zone. Now we back tested today, and I don't think this move is over. We back tested today. I do think we have further to go, but I think we bounce first. I think we're going to have a little bit of retracement. We'll just consider that a back test of this falling wedge here. But the important part is when we actually get through here, we're in a little bit oversold conditions on the 65 minutes. So that's what's kind of leading me. We're actually long. We're net long, and then we still have our long-term put swings, duration puts. If you're not familiar with that duration play, I'll post that video up top. It's just a strategy for swings. Okay, so we broke down from the wedge. We're getting to that oversold area. I think we're going to retrace a little bit. It looks like we're in this position to have a tweezer bottom. So tweezer bottom, even if this candle ends up closing a little bit higher, it's still considered a tweezer. You can have a full bar and a hammer type doji or dragonfly, whatever this thing's called, doesn't really matter. So it looks like we have a tweezer bottom. We're gonna have a couple days reversal into CPI on Thursday. I think that's what the market's trying to tell us. I think that we're going to rally into Thursday CPI. It will be before the market bell, so we'll trade until Wednesday. So we should have a Monday, Tuesday, Wednesday, somewhat of an up move, maybe some sort of zigzag, seeing how we're looking at this being an impulse move to the downside, meaning a wave one for us. And then we should have a wave two. It can be a flat, but we're looking for a 5-3-5 rally up into Wednesday, and possibly just depending on how price action goes. If we don't have that complete and we're still kind of correcting, maybe the CPI gives us a fake to the upside to complete our correction, and then we start heading lower. That's what we're kind of projecting right now. Also, you know, I do see a couple of people talk about this move not being over. That's always a possibility, that this is just a larger wave 4, and we'll look at that on the Elliott wave, especially on the SPY. I think it's a little bit more clear that this is a possible wave 4, a larger wave 4, and we have one more move to the upside that's possible. I think our top is good, so we're going to look for the retracement and see what kind of price action we get from there. Start adding on to our swings and out of our longs. Okay, so I guess we'll look at a couple indicators. We're underneath that 8 EMA, so be really cautious. This is the first bounce, so I do suspect we'll get above, but not hold above that 8 and the 20 moving average. This is the 8 EMA and the 20 simple moving average. So we're starting to get our crossover. Usually on pretty much any type. A lot of people talk about the death cross with the 50 crossing the 200 and things like that. We have a cross here from the 8 EMA and the 20. Usually when you get that cross, that's not the time to get, in this case, bearish. This is the time where price actually bounces. This is a great signal, but we usually get the bounce. People usually get sucked in. It's our cross. It's our cross. Let's get bearish. Get the bounce and then start moving lower from there. So don't get sucked into it right now. Now's not the time to be bearish. All right, a reversal. So we're already in that oversold RSI in the daily time frame. So clearly we can have the bounce. We had the bearish divergence here. It played out. We have our initial move, so I do suspect we'll bounce into possibly the 50-60 type area, maybe head lower from there. We don't have any divergences. I don't expect to have any divergences on the daily time frame until we complete a 5-wave move. So we'll be watching that. And also the Williams percent R is in that oversold area. If we get a crossover on this 80, this negative 80, then that is a clear signal that our bounce is in progress. MACD headed to the downside. That's all there is to that. That's why we're going to continue to be bearish. We had our bearish cross with negative divergence. Awesome oscillator gave us negative divergence as well right here. So that caused us to be even more bearish on this rising wedge. Broke down from the wedge. Now it's playing out. DMARC. We had something. We had a 9 exhaustion signal on the Nasdaq on the what do you call it? The weekly time frame. Also the 9 here on the daily. So that's something we'll look at tomorrow for in order to see what's happening with the. Sorry, I'm flipping through here with the DMARC count. With the exhaustion, nothing really to show for this move here. And just to show our slow stochastic hasn't crossed yet to the upside, but is in that area. It's starting to curl up and is in the oversold area. So we're looking for at just a bounce, at minimum a bounce we're looking for. That's what these indicators are telling us. We're not going to go through all of them on the SPY because they say the same thing, but let's go jump over to the SPY to take a look with the traditional technical analysis and position where we are. We did not make new all-time highs. I constantly said that I was suspect about that happening. Could it still happen? This be a wave 4 and it goes one more up? Sure. I'm not sure that that's the case, but that definitely could happen. I drew this. I was seeing what might be if that continued to go higher. It's playing around with that. But you can see we're back here. Had a fake break. We had they call it a throw over on this wedge, and now we have a fake break. And I suspect that our bounce will bring us back to this area, and we'll show you how that coincides. Just check out this 473 to 474 zone. I think that's going to be a big zone for us. It happens to be right where this top of the rising wedge is. And then it has some other places. So take a look at that 474 as we go through these charts. And just to be clear, this wedge, I think we break down from the wedge, not in one straight line, clearly, but I think this is our rising wedge that we're going to get really bearish on, that we continue to the downside. And I can give you a quick visual of the, let's see, the ending diagonal should give us what we're looking for. No, because that one, no, we didn't get the new high. So I'll show the top, that we have the top. And okay, this is more like it. We have our A, our B, and now we're looking for a 5-wave move down for a 1, 2, 3, 4, 5. This is an impulse move. We're going to start accelerating on price action. I believe we get down. This is not exactly the place where we should be. I'll have those projections for you, and we'll look at that on the. We're looking on SPX because we already mapped that out. We have another video with that all on there, but I'll just show you quick recap And we're calling the Elliott wave flat because we project that that 100% move is our target. So we have an A, a B, and a C to start the correction. We have a larger B retracement and a much larger C headed down. Let's see if we can give you a visual on that as well. On the weekly, there we go. Okay, this is what we're visualizing. A, B, C into a larger A, B correction, and a C down to test the bottom of the Corona crash. We've been looking to test the bottom of the Corona crash. We thought we were going to do it in a zigzag, but we're making this flat here. That's going to be the A. Then we're going to have a larger flat play out where we get this B. The B can go further. It doesn't have to, but this is a 62% retracement right here. So we have this kind of mapped out here for you where we're projecting this could be right at the bottom, 2250 area. That would be our zone that we're looking to finish this off. It's going to take some time, folks. All the bulls are going to get in here. They're going to say this correction is over. We have an ABC. They're going to call it a wave 4 and looking for all-time highs. So you're going to suck in a lot of bulls here, and then we're going to have a much larger drop. Now, this does not have to be a huge move. We'll see how the all the indicators and whatnot. They should be extremely oversold at this point with divergences, and that should launch us to the upside. So it should be a pretty massive move, but it doesn't have to be. It doesn't have to be. This beat can just, correct 382, 50%. We don't know, but it should give us some indication that it should be reversing down to the C at that. So I didn't want to spend too much time here. That's a big picture. Let's go back to SPY. Let's go down to the 65-minute. We'll go through all those big picture scenarios tomorrow. But let's focus on what's happening right now here today. So we had this nice large move there. We broke from the trend, started a minor trend up here, broke down from that, and I think we're on to go to lower, much, much lower at this. I think this is the top. So we have our wave 1 here. We're forming a wedge. I do think we'll look to break that wedge sometime next week. And you notice this neckline here. It's possible that we have a left shoulder, head, and we break out of the wedge and form a right shoulder. Now look where the top of this, if we get perfect symmetry, it goes right to that 474 area. That's what I'm talking about. We're inside the gap. We don't have to make it that far, but we have this 473 resistance to 474. So you see that right happening right here. Okay. And so also I'll count this. Let's go to the Elliott wave count. For you Elliott wavers, we have our top in here, and we're looking for this to be a wave 1. So we're having trouble counting it because it wasn't complete. Now we had an ending diagonal, which kind of has been dragging us on for the rest of this week. We've been down all week, but here we go. 1, and then a 2, and now a 1, 2, 3, 4 for the way to end of wave 3 here into wave 4. And now we have the ending diagonal where we're making lower lows where it's a 1, 2, 3, 4, 5, all of those crossing back over. That was the ending diagonal right here. We made a slight new low today and got a lift off from that former 382. So so if this is a wave 4, we're right back at that 382. So this really looks like it could play out and be a wave 5. So we can't take that off the books, but I do believe this is a 1, 2, 3, 4, 5 completed up here at the top. So with that said, keep in the back of your mind, if we do make new highs, that's, maybe we get all-time highs and go from there. But our primary scenario is we have an impulse move down here with a 5-wave impulse move, and we're looking for a 3-wave correction, probably a zigzag. And these are the zones that we'll be looking for. Again, I told you the 473, it's right with the gap all the way up to 475, which is 786. That's where I think our zone is going to be. It's a little bit higher than I would suspect, but that's the high of this left shoulder as well. Even though This is kind of leaning to the downside. We'll see if we make it all the way up there, but this is our zone where we really want to start increasing our swings to the downside and looking to see what kind of reaction we get from there. Okay, just to give you a visual of Qs, 65. This 65, we have some sort of wedge forming here as well with positive divergence. I know I didn't look at all those on the indicators, but here's the indicators that we're looking at. It's the same thing with SPY. Now, this is counted a little bit different, but we have all those positive divergences here as price makes new lows here, made a new low today. And we just had finally a positive divergence on the MACD as well. So that's giving us a bullish crossover with positive divergence. We have a positive divergence a few times on the RSI and on the slow stoke. This is a perfect buy signal. I do think this wedge breaks to the upside and we get the retracements that we're talking about. Same thing with the reverse here. We have the positive divergence again today above the 80 line here. So we already crossed a bullish cross on the Qs. And so now let's look over at the Elliott wave. Now the Elliott wave here, I got to move this one. I think this one is complete here. It's counted a little bit different in we have just all 5 wave moves, but no actual crossovers. We have a 1, 2, and then a 1, 2, 3, 4. That's a flat for the 4, and then a 5. I already counted on the lower time frame a 5 wave move down here to make a new low. So 1, 2, 3 all the way down here. A running flat for 4. And then a 5. So that completes there. We should not make a new low. If we do, then something else is going on. And what I mean by that is we talk about, I'm going to try to talk about it a lot more, that with this 5 wave move that I counted here, that means that this could be a 1, 2, and then 3, 4, 5 as well. We could have another 5 wave extended move down here. Okay, so that's always the case. Whenever you have wave 4, it could end with this really small 5 waves, or that just could be a start of a larger 5 waves. Okay, it's a 5 wave down, 3 wave back, 5 wave down, 3 wave back, and then a 5 wave down here, or it could be a larger 5 wave down. Okay, so as long as wave 3 is not the shortest, this could continue to the downside. I don't think that's the case with all of our divergences happening. I think we have good buy signals. And then these are placed at the right numbers as well. So we could get these retracements up here to the 404 and possibly to retest this gap. I think that's more likely to retest the gap, not necessarily fill it up to 406. And we can't leave this out. Let's make this yellow so we can see it. We can't leave this out that the 786 would close the gap. Okay, so if we don't see a completed move here, then maybe that closed the gap. We'll see how this goes. We're starting over. We have this brand new low, so we still have to form structure here. So we're looking for a possible 535, or this wave 2 that we're looking for has in the past been a flat as well. Okay, so you can look for a flat. We'll have to see. We just have to keep that in mind. This could be quick zigzag up with CPI, or if we see a 3-wave structure and we start to turn down, that would probably mean that we're getting a 3, 3, and then we have to get a 5 wave for the end of the flat, and this take much more time. Okay, I know that we have FOMC coming up on the 18th. So if this wants to play out time-wise to get to the 18th, that would be the scenario where we're getting a ABC flat pattern. So if we don't see an obvious 535, or that 535 is technically a 3-wave move. Okay, so if that isn't deep enough, perhaps it goes to 50% or the 62. and we pull back in a 3-wave move, just awareness, then we get a boom. Maybe that's the in move to going into FOMC and then further down from there. So those are the two patterns that are likely. Zigzags are the most prominent in a wave 2, and then just keep in mind that the market might want to wait for FOMC before heading lower to see what they say. All right, close to last year. We're getting about 20 minutes, so we have a couple more things to look at here. The VIX. The VIX here is really just tightening in range. I do suspect we close this gap, and then if price wants to continue higher in that zigzag type formation that I was talking about, or even a flat, we could just oscillate here, but then we'd probably try to close some of this gap, maybe half of it. We'll see what happens, but the more this starts to drop, the little bit stronger the market could be. All right, and then we said we'd check out the dollar. Let's go to DXY. The dollar has been in this falling wedge. You can draw as a channel as well, and kind of fake this out, broke above, and then fake break, and now is kind of testing the resistance area again. So this is likely, if it starts to fall down again, the market is rising as well. Okay, that's what we'll be watching on that. So we had the fake break. It's likely that this is a first initial move, and then we'll have a nice 3-wave move correction, maybe to close this gap here. That would be likely if we are going to get that correction that we're talking about. TNX, and then I'll show you Google just for 1 minute, because we put a trade on to the long side today. Now TNX is actually breaking out, so we had our reversal, had an inverse head and shoulder, back tested, and is now moving to the upside. So that's not going to help the market, but sometimes the market reverses a little bit while TNX continues to rise here. Once it starts to rise a little bit further, it really will start to affect the market. So we'll keep an eye on this. It's already breaking out, but it shouldn't. We'll see. At these lower levels, maybe it's not really affecting the market yet. Maybe we get up to the 43, so the 4.3% area, and it really starts to bring the market down, or even higher. All right. So as that goes up, it's going to be a headwind on the market. And then last, let's go look at Google. Since we put a trade on here, we did put a trade on NVIDIA, and we're out of that already yesterday. So you see this trend line here that we have, also a downtrend. This is a consolidation or a triangle where we made all-time highs here. It's possible that we do all-time highs again. This does look like a 3-wave move. So while the market is moving higher, I think this is a wedge forming here, and I'll draw that in later. Actually, I got a line here. I'll just do it now. So I think a wedge could be forming to make another all-time high for, not all-time high, that's another high for Google. I believe we have some highs previously. Yeah, we're not quite to all-time highs yet, but maybe we get in this consolidation area up here with this last wedge. So we put it on because the confluence going on here. You still have some room to go down. Clearly, it looks like it's moving down a little bit more, but it does appear that we have a 3-wave move in here. If Google starts to get just a little bit of a move into next week, it could be pretty strong and help move the market to the upside. We'll see. Even if this wants to make a 5-wave move, that's fine. You can count this as a 1, 2, and then a 3, 4, 5. So either way, we're looking for at minimum a bounce for Google, and up to this 140 area would be a good place to take off some profit. So that's what we're going to do. Close that gap here. And that's what I have to show you. So there you go. There's a trade set up here. Even if you're a bear or a bull, I think that with the oscillators, we have a reversal. We formed a wedge. We're forming a wedge with positive divergence here. You get a little tight in price action, but positive divergence. And then if you want to look at this in just a little bit different way, you have a wedge. We're forming a wedge, and we're looking to break out from that wedge. Okay? You can draw it like this too. All right. Thanks for joining us here. Have a wonderful weekend. We'll talk to you tomorrow. We'll make another video on the higher time frame visuals so you can see what these weeklies are telling us. And it's not really good for the market, but it's good for the trader. Have a wonderful day.